For over a century, the market's best traders have reviewed previous market leaders to get an understanding of how best to set up their trades and identify the next best leaders. That's exactly what we're doing in model book number 3 today for the ASX. We're looking at some market leaders over the last couple of years. 5 big movers, 5 of the strongest performers on the ASX over the last few years. And these 5 are grouped together in a different way to the previous model books. In an odd way, they have less market update, less investor insights, less news announcements than all the other ones that we've looked at before. So this is going to fall more heavily onto Garry Glover to pull apart and identify where the setups are, how to use volume price analysis to really zero in on the technical aspects to understand how these companies broke out and what we learned from them to then apply to the market leaders from here on after our future trades. With that insight, we say good morning, Garry. How are you?
Yeah, I'm good, Chris.
A lot of work's gone into this. There's been 15 companies now, or this will be the 11th through 15th, so a lot of hard work. And you've changed a little bit this time with weekly and daily charts. Do you just want to explain to us how we'll look at each company quickly before we jump into the first one?
Yeah, so just sort of look at some of the weeklies there, because I thought these sort of charts, as I say, there wasn't, I didn't know as much less going on until you told me there, but I just noticed on these charts there, like a lot of these charts actually went through a tough start, or just looking at the bigger picture of them, sort of, you can sort of see where they were in their sort of cycle there. But like a lot of them were sort of coming from, like I guess some reasonably sort of deep pullbacks. And if I guess the one thing you sort of see I think with, not sure if all these there, but I say most of them there, but the breaking to a 52-week high was probably a big catalyst for all these stocks. I'm not sure that's 100%, but I'm sure that's pretty important for most of these ones, if not all of them there. But that seemed to be lead to a change in character for these stocks, and then big changes sort of occurred there. So it makes me think about a few stocks here in the last couple of weeks that have actually come out of some pretty deep pullbacks and have made 52-week highs as well. So it's definitely something to be quite mindful of stocks.
Well, we'll definitely apply that. We'll have a look through these 5 companies and we'll see, well, hang on, have they hit a 52-week high, and how important is that as a catalyst? Now, it was really early going through these companies and then finding a tough time to have market price-sensitive news and updates. Regis was the best out of the 5 in the sense that they had the most communication and updates and news announcements to share and put in this chart. But we'll see the next 4 are actually quite scarce. So just a quick overview of Regis Healthcare with the ticker of REG. They operate aged care facilities across Australia. So that's residential care, home care, dementia services, and elderly individuals. A bit of a sales spin. Their services focus on delivering high-quality care through a network of modern facilities, supporting the well-being and medical needs of residents in a compassionate environment. Sounds like a great company. Didn't look like it right at the start, though. And we're going to have a look at that on the news side of things.
It's not the sort of company, Chris, that we normally associate with high super growth. You know what I mean? So if someone started investing in this sort of aged care facility, you wouldn't be thinking, ultra high growth. So, but the charts tell a different story completely.
Oh, absolutely. And this is something we've talked about in the Friday videos a lot. We've got to remove our biases, because you and I both looked at it, the launch pad, it lit up with property companies, and we said, well, they're a bit boring, they don't move much. You still traded it and you got a good trade out of it. But I know I applied my biases and thought, well, an 8% move on a property trust or a 15 or 30% move on a minor, which one's more? But we digress. We'll come back to this one to understand part of the reason why there's that negative run into these types of companies. On the far left-hand side, we're just about to come into the COVID 2020 lockdowns. We've ticked over into January 2020 and we've got a new CEO on Regis. That's this little flag on the left-hand side here. The drop here, that's not all necessarily Regis. We all know the market tanked into the lows, the March lows of 2020. So we can't blame that all on Regis, but it does fit into the context of what's happening in the market. Coming out of that, they rallied with the market, but then fell back down and almost retested their lows towards the end of that period, towards the end of 2020. Then they rejected a non-binding offer indicative offer from Soul Patts and a consortium at $1.85. They rejected that, and the share price sort of gave them a bit of a floor. Then the numbers start to come through here. We're looking at, so we've got 364.2 million for the half year end at 31 Dec. We won't go through all the numbers. We'll just look at some of the percentages. That's an 8.9% decline compared to the year before. COVID period, we can understand that. Tough times for these companies. So that's the start here, early 2021, I should say, and then later on they've got another update. What's interesting is in the healthcare, this blue flag shows that it peaked. So the healthcare, the index had peaked. Regis is well and truly behind here. So they're not up the top. You know, you see sell, they're not the other ones that did well out of COVID. Moving through, there's a capital raising, 110 million to strengthen its balance sheet and support the expansion plans. Sort of helps with the COVID lines and issues throughout that period. And there's earnings. It's reflecting a 3.5% increase, not shooting the lights out. In the next earnings, they have a 24.7% increase. Things start to get going early 2022. Then they've got another movement, 3.4% increase on the time. But here we have the blue flag. This one's interesting because it's July 2022. That's when the XJO bottoms. This is where it starts to get interesting for Regis. They're added to the ASX 300 index. That's the pink flag. Gives them a bit of a lift. We've talked about that before and a few other companies. Then we've got the investor presentations here at the start of 2023. This is really where they start to move in, just hit their stride and get things going. Got some more announcements. $40 million for New 23 and $725 million revenue, $40 million profit. They've also acquired new aged care facilities in Queensland. That's this next star up here. That is around the time that healthcare bottoms again. Now, we can't see it on the chart here, but the healthcare index on the ASX was retesting its lows, coming right back down near it. So this star here that coincides around the index bottom is significantly higher than the bottom that we had here before. And no doubt Gary's going to talk about relative strength when he looks at the finer details of the technical analysis. Then we just see the other stars. We've got revenue updates, we've got earnings increases, and then we've got the annual report, investor presentations, and then it just goes hyperbolic to where we are today. So the stars really give us, most of that is the reporting that is statutory requirements on the ASX or listing rule requirements, and then the capital raise. So not a huge amount, but there were some acquisitions along the way, and then some index movement, some indice inclusions. So with that, and a bit of a tip into, let's look at the comparative lows before they really kick into gear, the higher lows. I know you did that with Life 360. I'm going to hand over to Garry to look at the weekly chart for Regis and particularly all these yellow highlights that are super interesting.
Yeah, no, it's interesting there because obviously that, this weekly chart there, what it doesn't sort of show is that this stock actually went down from 2015 all the way into 2020. So basically five years of declines there. And we've only just taken that high out in the last week or two here. So gone back above sort of 650, which is literally 9 years later. So there's a thing, if we talk about this, even buying some of the best shares, you buy them at the wrong time, you can be waiting many years, sort of like, an Amazon there, you might, you bought near the peak there in 2000 there, you'll be waiting like 9-10 years to come back here. We saw that with Regis here. It's taken 9 years to go back and retest to the 2015 high. So that's why timing is important. But if you look at this sort of setup here, I guess the interesting things is, Chris, is that we had a low in the market in October 22 was the low. Then we had a higher low in March 23. And then we had another deep pullback into October 23 as well. That was a reasonable pullback there. So really it didn't show relative strength in October. Definitely didn't show relative strength in March 23 once we went to a new low. But that October 23 was actually pretty deep pullback for the market. And so we can see here, this was showing relative strength into that period there. So this wouldn't have actually been showing, like I think a lot of those other model stocks, I'd say 85% of them, Chris, showed relative strength from that October 22 low. Most of them were coming out of that pretty strong and they went on to be leaders. So this one here wasn't sort of showing leadership qualities until October of 23. And And at that stage there, we'd sort of broken a new highs, and we came back and actually sat on top of the previous sort of high there. So we've literally got a 52-week highs just before that week period. And again, classic sign here, Chris. This is when we know we're on the leadership. There is that all those big leaders, we know they show relative strength of the market there, but within 2 weeks of the market lows, they're often at new highs. So you can see here, out of that October 23 low, within 1 or 2 weeks, within 1 week here, we've gone to a new 52-week high. So that's why we know that is a leader. So when we see that, you see the market has sort of pretty deep pullbacks, and these stocks come out hard and they go to 52-week highs, like within 1 or 2. That's going to be something we're going to build into our system, Chris, is, when we see these deep lows coming out of it, what stocks are at 52-week highs within the first 2 weeks of those big market lows? Because that list there will be gold. So look at some of those stocks that have gone on to make it there. That's been really, really important there. And we know the biggest movers in the market, they're always basically sort of gone to 52-week highs 2 weeks after the market lows there. So they're showing that relative strength already, and they power there. But we sort of see that's had a pretty strong move there. I mean, once it's gone through that 240 zone, it's gone all the way up to sort of 650 here, so and beyond. So been plenty of VCPs, sort of setups in there as well. So just to look at the bigger picture, let's sort of go into the daily there and have a close look at that. So we've literally got that big sort of cup and handle on the weekly 52-week high, and then really we start building from there. That's kind of really the signs there.
So the cup and handle 52-week high, and then October lows of 2023, the relative performance. Now we're going to zoom in here. We can just see December, so we're missing that October low, but we're zooming in to find these VCPs and understand the importance of.
Yeah, so once we've basically sort of, once we've taken out that, build that sort of cup and handle there, come back and retest the handle there, kicked on to new highs there. Now we're looking, we've basically got bullish, we've got that relative strength there. We've got the big cup and handle, which we know is, typical for those momentum sort of style stocks there. So after they sort of make that accelerate, then we're looking for really places to sort of come back in here. So at some point they're going to cool off there. They're going to go through consolidation periods there. The interesting thing with this stock, Chris, is that it doesn't really have too many deep corrections. So it does sort of break the 10 and the 20 and the 50 all along here. But if you were just trailing the last swing low all the way up here, that would have sort of kept you in there. So this is sort of one there. There was no real moving average there, which sort of tend to sort of help it there. I guess it's one of those things that you found that as these markets get more vertical, then those shorter term moving averages probably become more important in the short term. So you want to be sort of selling some into heat kind of along the way there. But I think we had a few VCPs in there where the basic price action sort of tightened up. And then we're breaking out of those ranges. And then we're really sort of, we just kept making high low after high low there. So I think that first leg there, we hugged the 20. Then we did eventually break the 20. Again, tightened up another VCP, had a bit of a break, and then maybe a break below the 50, which from a momentum point of view, that May sort of 24 there, you probably would have had you out. Really, because that's sort of that's normally pretty negative sign there for momentum traders. So I know, what's his name? IBD, William O'Neill, every stock that broke at 50, he'd be out, guaranteed there. Because, you know, sort of come back in again. So this thing ends up sort of bouncing back, rallying, and then the whole thing tightened up again and probably even a better VCP. See how tight that is? So as a trader there, that's really what we want to see. We want to see those really tight patterns there. Because, if you look at that pattern, at how tight it is, the range is so small. So if we were to enter any break there, our stop would be small. Because really, you put it just under the last swing low, and then we've got all that, so we've got really tight downside risk and then upside there. That's why the best traders, they're looking to trade these tight patterns, not trade loose patterns. So, as Kalamagi says, sort of loose is for losers and tight is for winners, So that's what I want to see. I want to see those really tight VCP patterns there. So it pops up there, has a nice run there, ends up breaking below the 10 and the 20 and the 50 again, and then sort of sets up again. So this is, again, so like a lot of the professional traders there, they'll trade those tight patterns. They'll, it runs up into, so 3 to 5 days of big strength. They'll probably try and trade some into that heat. They might sort of trail some of it as well. So whether you're using, whether you're using the 10-day or the 20-day, or whether you're using 2 or 3 days, sometimes I used to use a 2-day swing low, Chris, those are the last 2 trading days. So I just wouldn't want to see the low break apart. If it's really looking pretty strong, I would want to sort of see it break the last, 2-day low there. But yeah, again, it sets up another little cup and handle there, sort of, what was that, 24 there? Nice little, it's that classic David Ryan there, sort of going back to retest the high for that 3 days on its side there. And then you pop through there. I mean, that's a cracking signal there, that little cup and handle. That's the classic sign. Look at the volume there. There's absolutely no selling there on that climb there. So when you sort of see those sort of retest the highs, and you see 2 or 3 days on their side, no selling, and a 1 day back up, that should be sort of catching your attention. And that's particularly if they're already leaders already. So this goes, this really gets a march on there. Has another really little high tight flag there. I mean, how good's that look? That's getting about 5 or 6 days in there. Hardly sells off there. I'm guessing our volume is next to nothing too on that decline as well. Pretty tight. You'll see the volume probably. Oftentimes you'll see the volume tighten up, and there'll be 1 day in there, Chris, where the volume really just always disappears. Like it's almost like no something. Yeah. It's usually the day after that dead day that the market starts to recover there. So always look for that. You'll see 1 day selling, and you'll see 3 or 4 days there, and it'll just dry up. There's almost like 1 day there where it's. I know sort of a trade I used to follow there. He used to refer to this. He used to call it, if you get a little doji day and no volume, you refer to it as a gift. So you have to get that little gift there. So if you sort of see that after pullback there, no volume there, that's a day to really get your attention there. But obviously power's on, but it kept staying sort of strong. There's been a few little sideways consolidations in there, but really hasn't sort of given too much up here yet. So interesting that it has gone back to retest that 2015 old high there, Chris. So very interesting.
Well, that is a stellar run and a solid performance, and so many VCPs, cup and handles. In hindsight, yes, it's definitely super easy to trade, but applying this knowledge that, hang on, this is how we behave with the 10, the 50, the 20, this is what a VCP looks like, this is what a better one looks like. It's that kind of knowledge that we're really taking from this model book assessment to then apply it today, isn't it?
It's a classic signs there. You're literally going to show, obviously, you're showing relative strength, obviously, in the market there, but it's really important that you see that relative strength at the key times as well in markets. So particularly, like the biggest movers there, they've shown strength at the lows. So whether that's the October 22, March 23, or October 23, those are probably the 3 deep pullbacks for our market. Those are the 3 sort of deep lows. All the stocks in this bottle book there, they all show relative strength at, if not all those periods, some of those periods as well. So you want to sort of keep seeing. So sometimes you won't see that strength there. I think in most cases we saw the strength in October 22 for most. I think the first 10 all show relative strength in October 22. These ones here we've seen. We didn't see it in October 22, but we saw it in October 23 here as well. So at that stage there, it would have been standing out as a stock that was showing relative strength versus the rest of the market there. That's a good sign. And then, the extra tick is going to a new high within 2 weeks of a market low. And I know it's hard to tell what a market low is, but I think if you saw markets say come back more than say 5% and then start to rebound out of that, what stocks are basically at new highs 2 weeks after a 5% pullback? Those stocks should be, you should be writing those down, and then they should be in your watch list automatically. And then you're looking for a classic, we know that it's the same setup, Chris. It's cup and handles, it's VCPs, It's the same technical patterns over and over and over again. It's no wonder, William O'Neill and Calamaggi and those guys just keep saying it's just the same. You can go back to the 1930s, go back to the 1910s, 1950s, 1960s, 1970s, 1980s, the same pattern over and over and over again. So it's just, nothing changes, as I say. So, so we've got to learn these and trade them.
Well, that's exactly why you've got the model book, because if it's the same patterns over and over again for decades before it's almost a century, then it's imperative that we learn what those market leaders, what their setups look like and what the patterns were. So the next one in our list, well, that's just important to the model book and why we're so lucky that you put this together for us. The next one is Catapult, and they're the global leader in sports technology. They provide performance tracking and analytics solutions through wearable devices, video analytics, and data management systems. Now, their customers include elite sports teams, leagues, athletes who use Catapult's products to monitor their player performance, optimize training, prevent injuries, and improve game strategy. We got a scene here where they signed a contract with the college football in the United States. And just this morning, I was listening to how this is being used for breaking records and Olympic athletes and the like, to the extent that if you're running a 1,500 metre Olympic race, the analysis that Garry's running and my running would be different, because using this type of data, Garry should run the first lap faster than I should run it, and then the middle laps, it's all depending on his physiological data, which is lab testing, but it's using metrics like, using devices like Catapult to be able to capture those metrics and then take those analysis into the lab and then back out into the training field for new records. From the chart, on the news side of things, we're going to see a bit less than what we saw with Regis, partially because of the time period, but also it's one of those ones that's a bit scant on the updates. There are a couple of big contracts, but they don't talk about them all the time, and they weren't ASX news announcements. So you can dig deep for them, but it's more of a press release search as opposed to relying on the ASX for those updates. On the far left-hand side here, we've got revenue of US 77 million, and we're going to see that increase as we go from left to right. What they did say, because you can see from the 50-day moving average, this big red line coming down, they've fallen from grace. Fallen angels, what they're sometimes called. So the accelerated return to free cash flow was announced here throughout the September-October period of 2022. That's where the companies came out and said, we really want to get back to free cash flow. We've got a plan to do it. That's what we're doing. Now, their revenue update on the next star, 84 million, so it has increased. Then we'll have a bit of a lift up, and you can see the E for earnings down in the volume bar. After that, about a month or two afterwards, they reaffirmed their free cash flow guidance. Yes, we're doing this. We're on track to it. Here's the update. This is what it looks like. Gives them a bit of kick up again. Then they announced a multi-car agreement with NASCAR, making its expansion into motorsports. So normally it's been, think of AFL, NRL, that kind of thing. This is moving into motorsports, that kind of data and metrics. But they're still falling down. Then they have another earnings announcement. This is the E in the volume bar once again. And they're talking about annualized contract value. That's some key metric for them. But now they've finally kicked into $1 million of free cash flow. That's the target they talked about back here on the left-hand side. So it's about a year later, they've hit that target, they've announced it to market, and the market's happy with that. This is where they really start to roar into gear. So we've got earnings, we've got the uplift, we've got the rally, we've got a contraction here, and then another news update. They've expanded partnership with the NRL, Australian Football League, and they continue to provide wearable technology for the athlete tracking. Plus, they say their revenue has surpassed $100 million, 152 million Aussie at the time. Two more updates. This one, new sideline video solutions tailored for college football or NCAA football in the United States. And then another update of contract and revenue. Free cash flow is now up to 4 million. We see this star here down near the earnings announcement for June, July in 2024. And then we keep on moving up. Then they're included into the Standard & Poor's All Technology Index on the ASX. Not a huge amount of news there. So then we're relying on Garry to really unpack these charts to show us where the opportunities are, highlight the volume. As you can see, there are massive volume spikes in here. So a bit to analyse. Garry, we've seen the news. There isn't a huge amount. We're looking at the weekly chart here, and you've kindly included the massive fall from grace from where it was before. So what's happened on the weekly? How do you start off viewing Catapult?
Yeah, I think it's just important to sort of see the history of the stock here, because this is quite rare, the stock really, because really it went from sort of 50 cents to like almost like 430, something like 420, 425-ish, something in there. And it did that in the first 15 months, Chris. So literally sort of, started trading, had a little tweak at the start, but pretty much 15 months of just going straight up. So went up around 8 times.
I'll just share with that at that time, for anyone who's been watching this channel for that long, we were doing the top 6 stocks and the leading thematics, and the leading thematic was wearable technology and Internet of Things. So that 15-month drive that you got there, they listed well, and it's kind of you've talked about. They were a very good IPO coming into the hot space at the right time in new technology. So sorry, a bit of an aside there, but that's going back 10 years of looking at this.
Yeah. I guess it shows that these stocks can get hot, hot run there. The thing about those stocks too, when they first float, for instance, like a lot of it's, the free float's pretty low as well. So like a lot of the insiders will be tied up. So most of the shares can't be traded. So you'll find that, that's why it's important when you look at these IPOs, is to look at what percentage are held by insiders, because apart from having skin in the game, is that a lot of them can't sell them for the first 2 or 3 years. So, and even some of the brokers are tied in as well. They, depending on what deals they do, they might be sort of escrowed for the first 2 or 3 years as well. So it just means that can mean sometimes that between 50 to 70% of the shares can't be traded for the first 2 years. So you're only trading 30% of the pot, which is exactly what causes these stocks to have these massive runs, because there's 2 or 3 times as many people who want them as then they're unavailable. So that causes these big moves there. But I think, look, it's just interesting to sort of see sometimes these stocks can have these big runs, but they can also have these big declines, and then we shouldn't just wipe them off the sort of slate there. They can recover again and start to improve there. And so I think really looking at probably keeping an eye on the 52-week high is pretty important, because then for sort of see stocks will go through declines, but then once they maybe base out and start to build again, if they're sort of making a new high for the last 52 weeks there, it's always a good sign, I think, as well. So, but see, I guess interesting there. I guess the only other ending on the chart was 2020, Chris, as well, which I know that's the coded low, but it did undercut the IPO low as well. And so you see this actually, it's funny actually, even though this has happened 5 years later, you often see this in the first 12 to 18 months of the IPO as well. So we go back and study IPOs, which I have looked at in depth there. You'll often sort of see price get undercut there. So it can happen with the first 6 to 18 months. You come back and undercut the old low. It's always a level to keep an eye on these stocks. We start to sort of see some traction after a bit of a pulse break there. It's sort of when they sort of can get going here. But, after you sort of get a pulse break of the low, I mean, that gave us a target just above that previous swing high, which was reeled in pretty quickly. Then it's had another pretty decent decline there. But again, I guess from the 23 there is probably where we're sort of drilling into it, having a look at what happened after that period.
Well, that's where it moves from 60 odd cents or just above to where it is today, 220, 230. So that chart here, Catapult on a daily, and we're happy looking at throughout this period here, those lows that you're talking about, we're coming into 2023, April, just before April, we hit that low, and then we start to shoot up. But then you've got the yellow highlights, where we really get interested in.
Yeah. I mean, you shouldn't really be looking at these sort of stocks until you break a swing high. So like a little B-wave break. So look, it might have been on your radar there around April, May of 23 there, because we did break that sort of February high. So that's the first sign there that you've got a potential change in character. Because you've got a pretty meat downtrend there. So to me, these sort of high momentum stocks there, you want to sort of see a break of a swing high there. And I think also breaking it, particularly if they're sort of coming from a pretty deep low, then you usually want to see a break of 1. Sometimes you want to see a break of 2. But what you do see out of this here, particularly that from that May low, is that you see a really, really impulsive rally there on big volume. So all of a sudden, this thing's just taking off here. So that should basically be your alert for this stock sort of suddenly got some life again. Because kind of want to see these sort of strong moves there, and then them pull back and contract. So that really is the first strong, really impulsive strong move. Then you get a contraction, and then there's probably a little bit of a B wave break there, a little bit lower in there, but yeah, definitely adding on the break there, and again it goes pretty impulsive there as well. So it probably moves the same amount as it moved into that congestion, Chris. Yeah. So that's usually a measured move. So a bit how that sort of how it moves out of it, usually the same length of the size that it moved into it. So it gives you sort of an idea as to sort of technical target you should be looking at there.
Then, we have a bit of a pullback of some sorts. So you've hit the 52-week high. You've highlighted that late July, early August. There we go, 52-week high, and then comes tumbling back down. And then you've got this VCP, sort of this little funnel that we're coming down. Doesn't quite retest these lows. What's the critical move? What are you looking for critically in this period here?
Yeah, as you can see there, it ends up breaking the 10, 20, and the 50 going through there. And that's why the pros will trade some into heat. So, I think, Kalamagi will basically sort of sell a quarter or half of it into a hot boost. They might sort of sell some into, day 3, day 5. Or if they have a bit of a measured move, they might sell a bit more. And then they'll run the rest either like a 10 or a 20-day moving average. So if it pulls back here and starts to break down, they'll exit there. So it just means that they lock in some profits on those hot days. But sometimes with the momentum names, you just don't know how far they're going to run. So that's why it's just important to bank some and then let the rest run there. But, you would have moved the rest up to break even or above. And then you start using a moving average and stuff there. But we see that it breaks down and it trends down there. We get a series of lower highs, lower highs, lower highs. We don't start breaking the little, we get a little tightening pattern there, so a little VCP. We do break out of that. We do get a bit of a B wave break as well down in that sort of, between that sort of 90 and, maybe 96 cents, something in there as well. So that'll give us another trigger there. And then we're off again. We know that this thing is sort of like, sometimes you look at how, it's moving impulsively and then pulling back in a corrected manner, overlapping, moving up impulsively, moving down, overlapping. So once we sort of start to see that character, that's what we're looking for. We want to sort of see things that move up quickly and pull back in a sideways orientation. So breaks out there, gets pretty impulsive there, gets a little VCP up around that sort of 110, 115 zone, whole thing tightens up and then kicks on there. Happens to break a 52-week high as well, which is always a good sign for these sort of mental plays. That definitely should put it on the screen there as sort of potential, again, a bigger sort of change of character as well. And it does sort of, once it breaks that 120 zone, it goes all the way through to 140. So again, we want to sell some of the heat, run some of the moving average there. Hopefully you've sold some of the heat, and but we get with these sort of little B waves and the VCPs, they're places to sort of potentially add to some of the positions as well. So you might sell some in the heat, then if the price tightens up, you can add it back on again. So this is why momentum sort of traders there, they will sort of they often carry a piece, but they will sell some of the heat as well. I think what you see here, just see the stock, once it's had a pretty good move, that's a pretty impulsive move there, sort of 85 cents up to 140. So hasn't quite gone the 100% there, but it's a pretty decent move. And the whole thing goes through a large sort of sideways orientation there. Has a big A, B, C. The whole thing sort of tightens up there. We should be, once we sort of see that A, B, C and it's sort of flat, the beauty of that, Chris, is that see how it sort of stays in the top half, probably stays at the top third. So McLaren is to say if it's in the top 25%, that's really strong. But anything in the top third is a show of strength as well. So normally if you congest in the top third of the price, then that's a strong sign that you're gonna come out and go on with it. So it does tighten up another VCP in there, and that's the beauty of the momentum trading, Chris, is that we're looking for these sort of cup and handles and VCPs and 52-week highs. We're not sitting, and we do want to take something to heat. And once they break a moving average, we want to be out, because what happens here is that this goes sideways for like 3 or 4 months. So if you're sitting in there, I know, people might like this company, but look at that weekly chart. It's gone up and down, up and down. So that's some big moves there. So that's you can sit in there and invest and go through those big moves, or you can be a little bit more savvy with how you enter and exit these things as well. Me personally, I prefer to sort of be in there when they're moving, and as Minavini says, spend the least amount of time in the market for the most amount of gains. So we can see here basically it breaks out of here and it goes on with it again.
Well, just before we move to the next chart, we know that from the previous videos we have had questions about what are VCPs and also what are B-wave breakouts. So I'll put links into the description below, exactly breaking down what these trading setups are. And we'll move into the next chart. So just knowing we've got VCP sitting on old high, highlighted in yellow, and that takes us to about the March, April area of 2024. We tick over into the next chart. We've got VCP sitting in old high. That's the yellow highlight once more. And then this is about where we got to in the March, April area of 2024. So we can see this VCP working, sitting on this same sort of support low line around this previous low. So coming back, just not quite retesting it, but getting close to that area. And then that's that box that was partially highlighted in the last chart. So now we've got some green commentary going on here. What happens on this break, Gary? And is there enough of an indicator to actually trade this? Like the B-wave breakout looks like it gets surpassed just on the close coming into that day. And the volume looks, well, pretty low in comparison. And then there's obviously the gapping up day with big volume and then a big selling. But is that a tradable B-wave break just in here?
Yeah, you stole my thunder there, Chris, because if you look at that volume from November up into that rally, see how strong that volume is at the end of 23. So lots of big bars all the way up there, and then it goes through a bit of a sideways. Because even that first leg down, no volume, and it goes up again, and there's a couple of bars in there, but pretty much in the last week or 2 weeks there's literally about 8 bars there of no volume at all. Even though the price is moving around, the volume is not going on there. So it's had a big move, big volume, gone sideways, stayed nice and high, nice and tight, and then the volume dries up at the very end. That's just textbook sort of stuff here. So that's what we should be looking for across the board there, signals there. So comes out here and then it has a really nice move. And again, I mean, look, to be honest, if I was long that stock there, they get broken out. You might have entered on the breakout day, had another bar up the third. Look at that big move on the third day. If I'd seen a move like that, I would have sold some into that strength on that third. Even though that's gone higher, it'd be nice to say a big move like that, big wide range there. That's selling in the heat. That's a big move there in 3 days. So you would have at least taken a quarter off into that. Because when it does end up having an inside day and then going higher a few days later, but professionals will basically sort of trade into that sort of heat there. So, and then whether you're using the 10 or the 20 to exit there as well, you should be sort of selling and get more into sort of some heat as well.
No. Okay, so that's selling as it cools off. Obviously, 52-week high once more. Pulling back, the volume starts to peter off. And then we're building this VCP again that you've sort of highlighted. So what's the no dominant MEA? So you're not seeing a consistent one, or what's the green commentary pointing to?
Yeah, so looking like a lot of those stocks in the past there, they've sort of tended to track, maybe 1 or 2 of the moving averages. So either the, like the really strong ones there, I think, maybe Spartan, I don't think maybe Findi or something, they might have tracked the 10-day of quite a bit, whereas some of the others basically just track the 20 and things like that. So, but yeah, there's no sort of dollar one. The only thing here is the 50, but it has had a few touches there and sort of hung around there. So that's probably the most dominant is the 50 there, but it does sort of cut across there. Kind of interesting that we're looking at that pullback there now, because I've just noticed this now, from that April high. See how it sort of pulled back in like a little 5-way zone. So it's come back again, and then a 5-way. So I've noticed a lot of those high momentum stocks will do that. They have that really sharp move, and they might come back in a little. I traded ASB the other day, and it came back and it actually did a VCP in the pullback. So the first leg was the biggest, the second one was the medium, and the last leg was the smallest, and it just undercut. So it just undercut the last low. Well, this might be a place that might turn here, and the volume dried up. And then you can see there's no, look at that pullback back to the 50. There's no volume, so there's no selling there going on there. So that can give you a bit of a clue there. So it does jump back up again. It comes back down again. Again, no volume on the selling as well. Then the whole thing tightens up. And nice little, that's a perfect VCP there, because the whole thing tightens up, and the last leg is nice and low and nice and tight. That little, because again, you have the A, the B, the little C there, the third leg down, and the price tightens up here. So that's exactly what you want to see if you're trading these VC patterns up there, is that the price tightens up there, and that last little curl, last little coil there, gets really, really tight, a light volume there. Now look at how it comes out. It's literally 1, 2, 3, 4, 5 days into the heat there. That's why the pros say to talk about trading day 3, day 5. Trading something into heat there. 'Cause that's oftentimes where you're going to sort of see the big move. They can kick on there, but a lot of the gains will be made in those first 3 to 5 days. The gains that come after that might be only a little bit further. Well, it might come back as well. So,
looking at the charts in the model books previously, you've talked about this phenomenon that happens after that massive breakout where we see this huge volume. We just scroll down here to see how large that volume is.
Yeah.
2 big green volume days coincide with these 2 gap up days. So huge ranges. And then this is a question, we haven't talked about it before, but this red or black day, the down day here where they're selling, I'm looking at the volume and it's minuscule in comparison to the 2 previous days.
Yeah.
Not a huge standout to sort of this movement that preceded it. So how important is it to have, if there is selling, it's so mild that it really doesn't stand out on the chart? How important is it for the longevity of that trade to not see that pressure selling after that heat?
Yeah, look, there's 2 things on that chart there, Chris. You've highlighted the second one, really, really important. But the first one, you mentioned the big volume as well. So that when you do see a market take off and then shoot up, if you do see that big volume spike, that can be a temporary exhaustion as well. So I see this on the top, see this running up into highs and lows as well. So oftentimes you'll see that big volume spike can come with a temporary exhaustion either to the high or the low, depending on how it goes there. So that day there, which is the high there, that massive volume, but it's almost double any other volume. Literally traded 4 million. I think 2 million was the previous high, and that was big. And we probably traded under that. Maybe 500,000 was the average. So literally you're trading 6 to 8 times the average volume of that single day. So yeah, I know it's gone up here, but that can be exhausted, that type of volume there. And that'll sort of oftentimes exhaust the thing in the short term. So what you hope for is you're going to get 1 day of selling, but you hope you don't get follow through. And that would have been a good sign there, because that was a pretty decent sized move, big volume bar. And that, if that bar hadn't been so large, that selling bar might look a bit bigger because it is so prominent, but then you don't get any selling through there. So then it does a bit of work. It sort of goes back up again, pulls back, tightens off again. This is the thing, I think with these, sometimes with the stronger names there, this is probably sort of something is that you want to trade some momentum in the heat there, but some of the companies you really like here. So if you really like Catapult, because I think everyone used the product, everyone sort of saw the Catapult in the back of the the jerseys and the shirts. So if you watch any sporting, whether you watch AFL or rugby or whatever else, they're all wearing the Catapult in the back of the shirt there. So you can see the products are sort of getting out there. And this is the one that was actually gone. It was a bit like Xero and 360. They've gone from being a bit of a revenue model to now sort of starting to make money. So they've gone from just, because a lot of them were sort of, just focused on, well, everyone's got to focus on revenue, but they were more focused on just trying to get some money in rather than being profitable. So a lot of these companies where the revenue was pretty light and they weren't making P&L, but they're just worried about growth and trying to get subscribers on board. But once these companies hit that sort of that break-even point where they flip from being just a revenue company to basically now sort of a big profit. That could be a bit of a game changer for those stocks, and it has been for 360, has been for Xero, and it has been for Catapult as well.
Well, I think Catapult at the time, if we go back that first news when they're talking about the free cash flow, it said, look, we've pretty much got a headcount freeze. We don't want to add any more staff. We're not adding any more sales team. We're not adding more R&D. We're not building the team. We've built the team. We have the team. Now we're going to go win. And that was sort of their game plan. And obviously that has unfolded. And when they hit their 12-month marker and said, yes, we are free cash flow. We are $1 million free cash flow. Means we're not bleeding. We're not looking for raises anymore.
Yeah.
And 4 million cash flow, which is about coinciding with one of these jumps over here. So, sorry, sidetracking back to the news, just that final B-Wave and VCP that we're coming into here. Any comments on how you trade those and what you learned from these to trade as we're getting throughout a more mature part of the move?
Yeah, I was just going to say, I mean, because not everyone who follows or watches these videos there is going to be, like I mentioned, trade like yourself. There's some people will be medium term and then longer term oriented as well. So, but still, even if you are going to be longer term oriented there, still probably worth taking some off into that little bit of heat and then riding the rest as well. And then you can always add it back on as well when it has a pullback. And you can sort of see all the stocks will run up, cool off, so they'll tighten up a little bit there. So, just trade some of it, maybe hold some of it as well. But I'd be using, if I was a longer term investor or a medium term investor, I'd at least either be using that 50-day moving average, or at the very least look at the sort of the weekly longer term charts, even the daily here, just some of the bigger pullbacks, just making sure that we keep holding higher low. So any pullback, it just comes back. It sits well above the previous swing high. You can kind of see here, the low, each swing low is not broken all the way up here. So it has pullbacks, but it doesn't break the previous low. So it comes back in there. So oftentimes it actually comes back towards the 50. So any time it pulled back near the 50, we went adding to it. But the key there is to keep seeing consecutive high lows. So if you are going to sort of be that longer term investor, that's what you want to sort of see there. And what you don't want to see is breaking those lows. So once you start breaking one or two, so if you break one low, you break two swing lows, then that's not good signs. So you shouldn't really be, I will be out on the 50. Me personally, I'm probably out on the 20. Long-term investors want to have a model to be getting out there. That's the difference between, smart investing and, smart trading, or, is that you're going to have a place to get out as well. I mean, we're also talking about being in the market and adding to positions there, but at some point we're going to be wrong. At some point the stocks are going to have a correction there, and we know if we're trading these biggest momentum names, Chris, we know we've I don't know how many times we've spoken about the 50-80 rule. We know we're going to get a big drawdown at some point in that stock. There's actually one stock here I covered in the last model book, which is making it quite what I call a very negative price pattern. I might even cover it on a Friday, but it's basically making a sort of a setup there, which is telling me that this thing is ripe for either a 50 or an 80. I think it's probably more than 50 because I think it's more blue chippy, but it'll surprise people to sort of look at that, just because, but the thing about these momentum names, once they sort of start to wind up, get vertical, they will go through large corrections here. We're seeing it with all the big movers here. So, it's great to ride these big moves, but when the music stops, they will have big corrections as well. That's the thing about the big movers. They move up big and they happen to move down big as well. So we do need to have a mechanism to get out of the way when we go through it, because obviously we're going through a nice bull market at the moment, but at some stage we're going to go through a bear market where, we want to be able to have the capacity to sit out, lock our gains in and wait for the market to set up again.
Well, that's a critical point. And we know from Thomas Bochalski's studies exactly what you're saying. The top momentum companies are the best place to be in a bull market. Once you turn into that bear phase, they're the worst place to be because they hand a lot back. But we won't see many of those charts in this model book because you've highlighted and focused on the best performers. So there's Catapult. We looked at those charts. We looked to see how they climb. into those movements. The next one in the model book is SKS. Now, SKS Technologies is still a company providing electrical technology solutions. So that includes audiovisual, IT, electrical, communication infrastructure services. And their clientele, they span commercial, industrial, government sectors, and their solutions are used for data centers, defense, and renewable energy projects. Pretty hot spaces in the economy at the moment, not just domestically, but internationally. Now, we're going to have a look at this chart here. It does not have too many news announcements and updates, but we'll see where the key ones are. We come from a data center contract, $30 million. Now, this is the company really repointing and focusing themselves for data center work. So they have a contract here. We have sort of another update with earnings. That's the E down the bottom. Then they win an $11 million defense contract a little bit later on. And then they've got a $13.5 million data center contract. And then they've got a revenue guidance upgrade. And then they win another $90 million data center contract. That shoots them through the roof with massive volume that Garry will no doubt talk about. And then there's further data center contracts. They get to the point from coming from just announcing one data center contract, mostly because they spent about 2 years realigning their focus to take advantage of data centers. That was a 2-year project for them. So to the left of this chart, it's very much the same. Low movement, low volatility, patchy days, some days where it looks like it barely even trades, but that's throughout the transition phase. And then they start talking about their winning of defense contracts to the point where they just say, look, we've won some more. So they get very good at it. That's the chart, but we're going to learn a lot more from what Garry unpacks here. Starting off with the weekly, and you can see just to the left-hand side, this is where they're transitioning to a focus more towards data centers. So international data center contract win right down there. That coincides with the news. Take it away, Garry.
Yeah, the interesting thing about this stock, Chris, was around in 2005. So literally this stock went sideways on nowhere for literally 15 and 16 years. It really, just ground out. So it was on the board for a while. It might have even changed names a couple of times. Sometimes these things can do, but it was around for a long time here. It was that data center there which really sort of got things sort of going there. But if you look at that that chart there, even the weekly sort of setup there, the biggest sort of catalyst there was actually breaking to a 52-week high there. So we started to see some volume coming in, but breaking to a new 12-month high, that would have alerted you to the stock as well. As we sort of talk about, how important that is to sort of see that. So, that's why we should be looking at those 52-week high lists, quite a bit there, particularly after market lows as well. So we know that, again, that October 23 was a bit of a weak period of the market. So this would have been showing pretty decent strength at the time there. And again, wasn't too long here. This was making new highs there, and probably the rest of the market was making pretty, like a high and low, I guess, but reasonably deep low as well. So again, within a couple of weeks there, that's gone to I would say that has gone to a new 52-week high there, probably around that data contract win as well. So would have been on your radar, at that point as well.
Just coincidentally, the October low in 2022, they were a relative performer. It didn't really lead to them being an outperformer for a year. But as you say, you come back to the October low of 2023, that's when they're pushing a 52-week high when the market's at a low. Hang on a second, they are really ready to run. So you've got that catalyst. Yes, we're over 52-week high. We've had contract wins after repointing the company for 2 years. The volume's there around the 52-week high. What do you interpret here? So is this tradable, or is this kind of hard to move, or should we go to the daily chart?
Yeah, we'll go to the daily. Just want to sort of see, like, this is the size of the movie. I mean, people say we don't have big moves in the Aussie stocks there. So even waiting for the 52-week high there, probably right, 28 cents there or something. It's gone to $1.70 there. So it's gone a fair amount of time above our entry there. So, we still can get these 400, 500, 600% moves here in some of these stocks there once we sort of, get the right sort of catalyst there. So, we sort of know the VCP, and we're obviously going through a bit of congestion at the moment there. But if we drill into that daily chart there, you see that contract win, a bit more volume start to come into the stock. It's a little bit choppy in there, but I think the big catalyst there is a 52-week high. That might have you sort of looking at an entry point, and then does go sideways for a little bit there, but it doesn't really give too much away there. Then we start to see some real buying start to come in. The one thing you'll notice there is that most of the consolidations are sideways and pretty lightly traded as well. So we get a few little up bars, a few little volume bars there, but we don't see any selling here. So some very, very lightly traded days there initially. It starts to get a bit more liquid as it moves higher. A bit more interest in the volume starts to get traded, then starts to get easier to trade there. That's a problem sometimes when they're small like that to start with. A bit lightly traded, they're hard to get sort of set in those positions, but you sort of once they get a bit more liquid, a bit more activity, and then we see a nice little VCP there as well. So a couple of down days there in May. Might have had you a little bit spooked there, but it bounced back again, but the whole thing just sort of tightens up again. And then, might have been nervous about the selling the first couple of days, but then it really just dries up into June there. It really goes tight, and you'll see how literally volume and strike completely up. So again, that's what you want to see. You want to see that strong run, bit of a pullback, whole thing tighten up, volume dry completely up. Then you're looking for some buying, some volume to come in and then drive things on there. So, the beauty of that is that's probably gone from 20 cents to 80 cents. So it's gone up 400%. So that should be on a radar because that sort of stock has gone up 4 times our money in it. So, we sort of think, if it has a congestion and it rallies there, this thing can go up 2 or 3, may not go 400% again, but it could easily go 200 or 300%. Yeah. So it goes basically goes from 70 cents there to $1.70. So it goes about 150% or something like that. So yeah, still pretty solid.
Okay, so there's that little congestion, which is a possible one. You've got a possible entry here, bit of a gap up, good volume on that gap. So you've talked about that a few other times. I think it was also on Friday where you talk about change of character trades. Change of character, we've already had that 100% gain after a decent breakout from the 52-week high. So as you said, it's already on your 100 club list. You know that it can produce that sort of movement again. So is that the main view of your entry of this small VCP and that possible entry, knowing that it's a 100 club, knowing that it's a high octane mover? Hey, we've jumped up, we've got volume. This could be it.
That's exactly right, Chris, because we're sort of, most people would look at that chart at that stage there, right there, think, it's gone too hard, it's gone too fast. That's, that's probably as good as it gets. But if we've seen a stock already have a 2 or 3 or 400% move, that we know you can back it up with another 100 or 200% move, definitely as well. So, to be honest, it's sort of said after a 400% move, I'd be thinking this could probably go 200, maybe half of that. So, be looking for this, maybe to go, for 210 aside, So, so that's why sort of, even at, 110 there, you're probably, you sort of think you're only really 30 points half. We're not even, at a quarter of the gains on the previous move, so from a percentage point of view. So just keep that in sort of context there. I think that'll hold you in there. And then, the one thing about momentum traders, Chris, is that we study that chart there and see how when it got going last time, it hugged the 10. So you had it hugged that 10 all the way up there. And it wasn't until it broke the 10 that it went through a consolidation phase. Okay, so it's given us a lead and a cue of its behaviour. So we know in the past there when something's hugged the 10, the first leg, it's often hugged the 10 on the second leg. Or if it's hugged the 20 on the first leg, it's often hugged the 20 on the second leg as well. So if we look at that 10, so we should have been, based on that sort of previous move there, the 10 should have been our cue. So, and the 10 doesn't get cut until up around 160. So at that stage there, that might have been having you out if you're using moving average. So you might have sold maybe a quarter or a half into some sort of heat, but and then you should be sort of using a 10 or a 20-day moving average if you're momentum based. If you're a long-term base, you might maybe use a 50 or something different. But yeah, everyone's different. I'm not here to sort of say what rules and how you should trade there. all I'm telling you is what the professionals tend to do. And so I'm just trying to replicate personally the guys who make the most amount of money, what they do. So I'm not reinventing the wheel. I'm telling you what they do. I'm just trying to replicate that. And so far, it's been working for me. So it's more than doubled my returns previously. So I'm hoping that with a bit more skill and a bit more knowledge that I can build up, hopefully in a couple of years, over the next couple of years, I might be able to keep that rolling a little bit higher as well. So I'm a long way to go compared to the guns, but made some strides there, just bringing in some of those methods that work for the top guys.
I think Tony Robbins called it standing on the shoulders of giants. You don't need to be the tallest. You can just stand on the shoulders and learn from the best.
Yep.
So we've got SKS there. That's shot up, and the 52-week high follow and the VCPs. Next one is Step One. A lot of advertising, so a lot of people know this one.
So that SKS there, Chris there, sorry, before you jump ahead there. So, because that's sort of going through a bit of a consolidation at the moment here. Now that might break down here. It's a pretty decent sort of size consolidation here so far. But, when I put that context, it's only really gone up, 140% after a 400% move. Could still have another leg up here. The whole thing could, this was definitely worth keeping an eye on this thing here. Could still, I've been watching this one because the price action has tightened up. So,
well, it's also the top third of that rally, right? So from 70 cents to $1 from 70, it's 25% range, but it's still in the top third.
So at the moment there, it's actually had a bit of a pullback, bit of a bounce, and the whole thing is price is actually coiled and tightened up here. So it's at a really interesting point on the daily. So based on what we're talking about here, we can't rule this out from not having another leg up here. So it's not necessarily done here and finished. And you would know that correction so far is the largest correction on the move. So that's probably one little negative. Normally, when you see the biggest correction on the move, it can overbalance, but maybe you can go back and retest the high or something. But yeah, that's still should be on our radars, I guess, is what I was saying. Because we know sort of those, the one thing we learn those multiple corrections, those leaders, they often come back and take moves again. So they can go through those consolidations and come back on the radar. So
we know definitely you'll have a model book for over a couple of decades and you'll see a cup and handle, another cup and handle, another cup and handle. It can keep powering, and I guess Amazon can be an example of that.
Yeah.
Facebook and Google.
And if you do want to go and have a look at this yourself, go and have a look at the daily chart of SKS. And I'll give you a clue here. Have a look at the volume on the down days in the last few weeks. Yeah.
Right. Well,
I might give it away and say there's hard to find too many large bars. So that sort of does, that's important there. It might be you'll get that one day of selling there, but unless you see follow through, you may not see so if we don't sort of see, we sort of got to, you obviously see that bar there, but you look through the chart there, you don't see really aggressive sort of selling. Now, I know it's a bit of a lightly traded stock here, but yeah, hopefully what will happen is the whole price will coil up nice and tight, volume will dry up, and then you'll get hopefully maybe a catalyst that either breaks up or breaks down, and then we'll know.
Well, we're keeping it on the watch list, and we'll see, and no doubt you'll be talking about it either on Tuesdays and Friday reports. Moving into the next one, we've got Step One, which is that Aussie-based direct-to-consumer online retailer specialising in men's underwear of all things. So they are servicing markets in the UK, United States and Australia. And the sales spin goes, their customers appreciate the comfort and fit of its products, which are designed with sustainable materials and cater to a wide audience through an online platform. There we go. We're looking at this chart now, and we are seeing very few market updates, very few price-sensitive announcements sent to the ASX. We know from the listing rules that a company must do that. If they think it's price-sensitive, they now flag it that way. It comes up in our platforms and shows the price-sensitive news. Not too much here. They've got full-year results with revenue 65 million Aussie dollars, and they've got an earnings guidance update. Now, that earnings with the E here in, August. Can't see the Zoom. I don't know which year. That must be 2023. The big volume spike and the rally share price ensues. Then the earnings update, we've got a bit of more volume and a bit more of a kick along. Half year results in February, the revenue decreased to 35.9 mil, down 5.7 year on year, but a strong recovery in profitability, reporting net profit after tax of 5.3 million compared with a loss of 3.8 million. So while revenue's down, the critical thing here is the profitability, and that's with the star and the jump up and the big volume. Then we've got earnings guidance update once more. That is not much to run off, but Garry gets to unpack the chart in detail, starting off with the weekly, and this is a massive roller coaster. So, men's underwear, roller coaster, and I'd say it's a cup and handle on the long-term chart, but time will tell.
It's a great example of sort of why you don't get your biases, let your biases get in the way. You think, bamboo undies, sick. How many of those can you sell? So,
I remember a client, we were buying Domino's pizza at $5.80, and he said, how many more pizzas can they sell? Who wouldn't buy that?
Yeah.
If you don't know Domino's, go and look at the chart and see where they went from $5.80 about 10, 15 years ago. Anyway, sorry, back to bamboo undies.
I guess the beauty, the reason for sort of showing the weekly chart here first again, so maybe kind of spoiling some of it, but it does sort of just put in context that some of these sort of stocks can come on the board pretty hot. We've seen a lot of these here come on hot initially and then really trade down there. So you see that, step one was open up at 270 from its IPO price of 153. So again, they can all get, getting hot and sweaty over these or hot and sweaty over any sort of new IPO, but then they can go through a fade as well. And so this did go through a massive fade there. So, it came off to what, almost just above 20 cents there. So, pretty decent decline there. But again, it's that sort of thing. You see these new stocks there, they'll go through, early heat, everyone gets excited, and then they'll fade a bit, and then they'll often talk about whether they come off and then go back up again and come back and retest the low, or whether they go through a pretty mean downtrend. There's quite a lot in that model book, Chris, that have come off pretty deep from the first year or two of trading, and then built from there. I don't know what the percentage is. I'd like to go and look at that, but some of those biggest movers there have actually had some pretty terrible years in the first few years, and then built there. What the catalyst has been is that 52-week high again. So again, looking for that 52-week high. So again, we sort of, it's not until really, middle of 23 there that we're starting to come through there. You got to remember too that, this was probably, finding a lows at the same time the market was in October 22, but in October 23, when the rest of the market had pulled back pretty deep, this was actually, had already gone to a 52-week high and was in the middle of a VCP as well. So really showing a bit of relative strength versus the market and a nice little technical zone there as well. But the 52-week high is the first sign that maybe something's changing with a company there. That's why you sort of got to look at those 52-week highs on the stocks there, particularly, and we know, Chris, some of the biggest movers come from the earlier names as well. So you almost got to look, that's why I've got 22, 23, 24 IPOs, every IPO for that year in a watch list. So I just go back because I know that history's told us that sometimes the first couple of years can be pretty rocky for these companies, but then they can come out and do really good things. So sometimes those newer companies can do pretty well. So even after a rocky start there, but this has a few VCPs in there. You can almost sort of say that's a little bit of a cup and handle there after that 52-week high, Chris, as well. The thing does sort of stay pretty tight and then breaks through again. So you get a bit of cup and handle, another VCP, another VCP, another VCP, and another VCP. So again, we get the same sort of, patterns, always setting up on those high momentum names here. So nothing new under the sun there. So that's our weekly. Let's go into our daily and have a look at that. I think throughout this period there, I think really the 50-day moving average was really the dominant area of support for this stock there. It's probably the one that did support the stock. The 10 and 20, less so. you're probably just going to keep an eye on, when the stocks maybe had 10 or 15 days above the 10-day moving average, that's when you're sort of going to get a little bit worried about how vertical they're getting, So that's a reason why the pros sell on the heat. But yeah, but if you look at that, look at that chart there, that VCP, and look at the volume, Chris, as well. Look at that. So 52-week high coming out there. Look at the volume that's come out there. So pretty interesting there. So I mean, kind of like, I know, I don't know what Mesoblast is going to do, but Mesoblast is, that company has just has broken a 52-week high just in the last week or two here. And look, I know they've had heaps of cap raisings, heaps more shares on issue there, but the volume's up. So it's telling me to watch that stock pretty closely, because it's had a few rough years. I know it's done a lot of cap raisings as well, so I don't really like to sort of see too many shares on issue. There's a few losers in front of it there, but we know from history when they do break 52-week highs and the volume's up, that's when they can actually they can kick on. So sometimes they might run up, pull back, sit on top of the high there. So yeah, I'm thinking I'm watching Mesoblast at the moment just because I think that I'm hoping it'll actually pull back and settle down a little bit, come back and tighten up, and maybe sit on top of the old breakout zone. But I think it's one to sort of keep an eye on, just based on what we're sort of seeing here with some of these names as well. But you can see here, once it broke out 52-week high, broke out 40 cents. I mean, it goes to, 65 pretty quickly. So we're up, 50, 60% there in a matter of, 10 days. So that's the powerful, of these mentor names there, these breakouts there, once they get going as well. So then the whole thing basically tightens up, big VCP, and the price action tightens up again. And again, look at that volume from the breakout, and then look at the volume on the tight, so we're going through October through to November, volume literally dries up on this pullback. So again, that's the classic sign there. If you want to see price running up easy and, big volume, and then you want to see a contraction, and then price and volume dry out, okay? And then you're looking for like either a little breakout of your little triangle, or a break above a little swing high as well. So that's what I call my B wave, is like the last little lower high in that congestion there. So I'm looking for a little break above that little high there. We can see that once we break out there, what was that? 1, 2, 3, 4, 5, another 10 days, we've gone from 60 cents to 90 cents. So we're up another 50% in 10 days. This is why we're trading in momentum there, because you get some big moves after these setups there. So it gets a bit loose there. The next VCP is not the best one, because that does get loose. That's what Kalamagi would refer to as a bit of a loose VCP. So not the best entry. But then it does tighten up here later on. So it's had a pretty good run, looking probably a little toppy there at 120. But again, the whole thing just tightens up, ingests, VCP, tight, and then the thing starts to sort of break up there. Even the first day, you want to think, is this a little false break here? But this has been a leading name, been strong, impulsive, had big volume on that breakout, big volume on the rallies, and then this thing just powers on and goes from 120 to what are we, 170, 180, or basically 194 there in pretty quick time as well. So again, the pros might have sold maybe day 3 into that heat, because that would have been a pretty big move up into roughly 170. So you might have taken some off there. It pulls back, pops up again, pulls back, pops up again, pulls back, pops up again. So it starts to overlap a little bit there, but really does tend to hug the 10 until it gets up to around about 180 or 175, 180 there. Yeah, that's why you sort of got to have some rules for these sort of things as well. That's why I think Kalamagi will basically sort of trade a quarter or a half into some early heat, and then he'll trail the 10 or the 20 with the balance. If you listen to him long enough, you're telling me he'll be up something 100%. He'll go, this thing can't keep going, I'll sell it. And instead of following his moving averages, and then they keep going another 100%. He goes, should have used my moving average, But even the best traders sort of get, but again, they're good problems to have if you're getting out at those are the levels there. But it's just important to have a process around these sort of, when you're trading these momentum names. And even if you're trading medium term or long term, I would still encourage everyone to have a process that they follow there. Just think about what's a good process for and you've got to come up with a trading style which is going to suit your personality. If you can't watch it every day, you don't want to be sort of trading, daily setups. Yeah, if you want to do it every week, maybe you just look at weekly setups there, give yourself a bit more room. But you still got to have some rules around how you do it. But see here, this has a bit of a pullback. Does tip over there. Has a reasonable decline there. You go from 190 down to 130 there, so 60 cents there. So it's it's a 35% drop in the share price there. So that's what I mean. Investor might sit through some of those bigger drawdowns there. I think you need a mechanism to sort of get yourself out. And then we just get lower high, lower high, lower high, lower high until the whole thing starts to tighten up again, and we get a nice VCP. This has been a pretty nice one for VCPs along the way here. That eventually breaks out. I'm sure there's probably a good volume on that break as well.
Yeah, so there's just the gap up has massive volume, but if we look to you guys before it, it's still relatively high volume in these two green bars down the bottom here.
Yeah. So you get the little 1-2 days out of it, breaks out. Third day, massive gap up. So again, the pros would be, somewhere at day 3, day 5, big gap up there. You should be selling some into that heat, If I saw a move like that, I would sell at least half into that heat.
So it's a big gap up like that, volume. Hey, if you're going to get much better than this, it could, but I'll take the profits or feed the ducks while they're quacking.
Because then you hope maybe you get sort of something which happened earlier in the year, get the gap up there, maybe you get a little VCP and the whole thing tightens up, then you get to put it back on again, maybe a bit lower. But in the end, this actually ends up pulling back, comes back to the 50, finds support there again, and then builds again. So you might have actually sold some up into the heat. But you might be able to get some back on there at 170 again, and it tightened up there and broke a little swing high as well. Right.
Well, that's a big solid move from step one, the men's bamboo underwear. And looking at those charts, we then move into the next one in the model book. So we're at Findi FND is the ticker. So this company, quite exciting in the sense of what it does and how it's moved, but it's formerly known as Vortive Limited. So that was ASX listed technology company based in Melbourne. Now they focus on digital payment solutions, systems and transaction processing, mainly in India. So a Melbourne-based company with most of their operations focused for the Indian market. Their services include digital banking solutions, electronic surveillance, managed services and merchant network that support utility payments, e-commerce transactions, and ticketing for transport. We need to look at this company in the context of what we have here in Australia is vastly different to what is available and what's operational in India. So what they're offering in that market can be seen as revolutionary in the sense these are things that we take for granted, but revolutionary for that market. And we'll see it in the news announcements how and why. So their customers range from individuals to businesses needing accessible digital transaction solutions in the underbanked regions. So that's the key point, the underbanked regions. That's really the market that they're servicing, not a market here in Australia where we're getting dolomite counts in kindergarten for anyone sort of around my age. We are not underbanked, but definitely India was, and that's where the opportunity is, and that's what shows up in the chart. So still we get a bit scared compared to model book number 1 and 2 for the news announcements and market updates, but they are critical updates and we'll see how they coincide. So if we zoom in here on the left-hand side, we're looking to coming in towards the end of 2024. So the second half of 2024, we've got July, August, the full year results come out, and they're talking about revenue increase of 25% and 65% rise in net income. So things are looking good for them. If we just go back left of the chart before these earnings and getting up to these earnings, in October 2021, they rebranded to Findi, making it shift towards the financial technology and transaction processing, focusing on India's large underbanked population. About a year and a half later, March 2023, they completed the acquisition of the remaining shares of Transaction Solutions International. That's a company and it's based in India. That solidified their market presence and operational control within India and an area central to its growth strategy. We see that really kicks in the share price and the earnings announcements in a minute. Then about a year later, April 2024, they secured a license for their branded ATMs in India. And that supports its financial service offering, including money transfers, utility bill payments through ATMs. We have that kind of through Australia Post here, but this is through their ATMs. And then that addition aligns with their goal to expand digital banking accessibility across remote areas. So they're the key components. What we saw previously, just with a couple of other companies, is they had that refocus with the data centers, refocusing for SKS technology. It took them about 2 years. They said, this is what we're going to focus on. We get our ducks lined up, and then they start plowing on through. So the CapEx and cash flow update happens here on this little star, mid-October 2023. A contract signed with State Bank India. I know Garry noted that before I even started looking at this. He said, this is a critical component of signing right here. That's the start, November 2023. Then they raise after that announcement, $37 million raise. And that's for the pre-TSI India IPO. So that's capital being used for growth. Then the rollout update happens here as the volume and the volatility drops off. They get a speeding ticket. This one was quite funny to read because it's rare that we see this in the ASX. Yes, we see speeding tickets, but pretty much they came out with, we've got no idea why the share price is running. Normally, the company will use a bit of a public relations spin on it. Look, we've got no idea, but here are all these great things that we're doing, and we've been interviewed here, and we've made this announcement previously, and we've made these inroads here, and we've signed this new contract. They'll use that as an opportunity to be a press release because a lot of attention goes to those speeding tickets. Funny, they just said no idea in a more professional way. Then they white label their ATMs in the agreement, which is sort of March 2024. Their earnings update, a couple of days later, that shoots the share price back up. April 24, they've secured a license for branded ATMs in India, and that supports their financial services offering, including the money transfers and payments through the ATMs. That's that growth strategy that they're looking for, and then the share price keeps going. So apart from the speeding ticket and a little bit of restructuring to the left of this chart, it's a pretty benign chart from the news announcements. So then it comes over to Garry to unpack this weekly chart that goes from flat line 2022, 2023 in comparison to late 2023, shoot the lights out, 60 cents, north of $5. So what's happening here, Garry?
Yeah, it's a big lesson for me, this one. Actually, I actually did follow this one pretty closely. Did see the stock have that relative strength there in that October window. So it is interesting there that October 23 came out of that pretty hard there, went to a 52-week high. And I did read about why they, I did think to myself, ATMs, that's a little bit old, technology.
Oh,
so,
decades ago.
But not realizing that obviously that wasn't that particularly old in India. But what it did do is went through that massive tight contraction there, and that really had an impulsive move higher, massive contraction. It took a long time there. That was multiple months there, and move higher there. So that's sort of something I sort of studied that quite detailed there, and so predominantly up to that point, they've mainly just been trading in bigger cap. Personally, Chris, I was sort of trying to stay with the leaders and not trade the sort of smaller names here, but I did notice this one here just had a really cracking sort of setup there. As a result of that, probably by learning Findi, it actually helped me trade LTP, which has actually been my biggest winner this financial year. So studying these past winners, how they set up, how they trade, it's already helped me, get one of the biggest winners this year. Even though I didn't think I traded that well, it wasn't really my fault when trade well, just didn't set up as well as this one here. This one here, if I saw this one again here, well, I know what I'd do again. So that's what we're going to learn here when we see these setups there. But look at the size of that move there. I mean, we got from 41 cents up to $4 or $5 here. So it's a big move. That's a big, so you're talking about 10, 12, so 1,200% move here. So again, people say, when they get big moves in these stocks in Australia, we do. We do. Most of us don't know that haven't, until it's already done. So, but yeah, I just think it's important there. The really interesting thing about this stock, Chris, if you actually go back, this stock's been on the board since, I think, 05 or something, maybe a bit longer, but it's obviously changed names and changed that. Like, oftentimes you see it'll be another name rather than something else, and then they might sort of like take over the shell, or they might rather, put a new asset in it, something, so, and it can change there. But the interesting thing about the stock is that it's got a history of big moves up and down, even though it might be a different company.
Bring up the solid rally before this one.
Yeah. Well, it actually had a big VCP. Actually, it went from 5.50 down to 50 cents. It went back up to 3.50, went down to 50 cents, went back up from $3 back to 50 cents. So the whole thing tightened up here over something like 15, 20 years, a big VCP. And then it started to emerge here. But it just, obviously the change of business is what you're looking for there. So it's a new, oftentimes these old companies which have been on the board for a long time, if they change, because sometimes you see like the ASX is trying to stamp this out, this sort of the backdoor type of listing there, where you sort of change business models. Yeah, because it robs them of a fee. So that's why they're trying to stamp it out. And but it's a good way for new businesses to sort of to do it cheaper using an existing shell, which is in the same sector normally. That's probably the one thing ASX is trying to do is, if you're going to roll something in there, it's got to be at least in the same area. So, but again, the big tell for this one here was that 52-week high. So, coming out of that October period again. So again, within a couple of weeks of that October low, this stock's at a 52-week high. So we would have been showing up after that market low, relative strength there, and we got a new business model there. So it would have been twigged your interest there. But even watching that stock there went from, what was the low there on the, well, if we go to our daily there, let's just go straight to our daily, have a close look at that. So this is probably the most important move here. So go from 41 cents up to 130. So literally go 300, just over 300%, Chris. So that's a nice move there. So again, most people see a 350% move and think, oh, I missed it. Gone. Too late. Gone. But we know that that sort of means that, once this sort of calms and settles down here, you can do the same thing over again. So what it does here, it goes through a bit of a consolidation here. I remember at the time there, that looks like it's a bit deep here, but at the time there, we didn't have what was in front of us, ahead of us. This looked like a pretty square, really tight consolidation there, particularly if you zoomed out a little bit there, you would saw this spike here, and that's like a sideways sort of move there for quite a period there. So it just really wasn't giving up much of its gains. It was staying pretty tight there, and the volume had really sort of started to dry up here as well. So it was definitely one that I was watching pretty closely at the time there. But yeah, it was a little small. I wasn't sort of trading too many small names here, but it was definitely sort of caught my eye here. But we saw definitely a little broke out of that little congestion pattern there, broke a little B wave, so broke out a little BCP. The rest is history. They really, it was a really aggressive move there. So whether you looked at, I think in the past they did hug the 10 pretty closely, but it did break the 10 a couple of times here. But again, if we sold, sold some into heat, I'll attract some with the 10 and some with the 20. But oftentimes, if it's really aggressive, what I might personally do is trade maybe a quarter or half into that first 3 to 5 days heat. Then I might even put a quarter in it. If it's really aggressive, I might put a quarter in a 10-day moving average stop, and I might put another parcel in at a 20-day moving stop. So I don't have I like to build a position, and I like to exit different levels as well. So it just sort of keeps you in market there at the times as well. So you might have, I might have got knocked out on my 10, maybe a quarter of my position, and then maybe it might have kept me in for a quarter, and then maybe I'm looking for another little VCP again to try and add to it. But yeah, this is a pretty aggressive move. It keeps going pretty solid here. But again, the lesson is when you see a stock move from 40 cents to 130 at 320 or 330%, it should be telling us here that we can get a big move. So if we're looking for 40, 50%, we're probably pretty happy with that. But in the context of that move, it tells us that this thing could probably move at least half of that. So if it's gone 300%, maybe this can go 150%. It's got the potential to move that sort of move there based on that first leg up here. So
extending on that first leg up, listening to you talk about previous companies from the Model Book 1, Model Book 2 videos, this first leg up, 100% run, joins your 100% club. You've been looking at these consolidations that they've had, and they can go for 3 months, 5 months, or longer, can they?
Yeah. So sometimes I get the 2. I can go for maybe 3 or 5, and then yes, someone's sort of got from 7, 9. Probably not many go for that long, but I would suggest that maybe most of them sit in the sort of 2 to 5 months sort of consolidation is probably where most would sit in there. But you can see them go longer. So so some of the we've seen some of the oftentimes some of the smaller names, Chris, will go longer. They'll be 20 to 40 cent stocks. They might actually go through like a 5 or an 8 month sort of congestion, So this one's a little bigger here. So, but yeah, I mean, it's a good setup there. The volume's pretty robust as well. I think the thing is, if you look at the pullbacks on this one here, it does pretty light volume. So I know when I was sort of trading at LTP, I thought it had sort of took off a little bit back, and I thought, oh okay, but the volume was pretty light. Okay, this means it's still in pretty good shape here. So, I think this one here actually does tighten up there between 140 and 150. You could have got there's another little B wave in there. So breaking above about 152 might have had you another little B wave in there as well. That might have had you adding to it, like maybe just a quarter past or something small.
Well, using that, there's a bit of a market move in. I think you've got it on the chart after this one. Is that we're at about $2. We're coming to the end of February 2024. We're at $2. You've had that B wave break, that opportunity as it sort of paused after this breakout. You've sold into heat. You've maybe had your stop 25%, 10-day moving average. You could have sold half of it by this stage. And then you get a B wave break right here with good volume. The volume sort of petered off, but then you get a movement back up. So let's see what happens as it comes towards 2.
You know what happens there, Chris, with that move as well? Because if you've sort of managed to sort of get a full position on there, so if I say I've got a 15-20% position size on there, and then I sold sort of a quarter into say 3 or 4 days, and I sold a quarter into day 5, and then I trailed the rest with a half a 10, half a 20 there. If I'd sort of banked 40-50% gain, and then I'd basically moved the rest to break even, or probably above break even, is that much there, then you've banked some dollars profits already. You've got all your positions sitting at above break even, so you get another 10 or 20% locked in guaranteed on the balance. It takes the pressure off your trading, your mindset. So now because this stock's been good to you, you're going to watch it even closer, and see if it can be good to you again. So because that's what human beings do. They go back to those things at which we have a bias towards the winning trades in the past. To go back and look at them again because they Whereas if we lose on something, we often don't want to go back there. Last time I traded that, I lost money. I don't want to go back there again. So it's a bias. So, but the beauty of that is if you have had a win there, it does take the pressure off a little bit. So you are inclined to, you'll be easier to put another quarter on a little low B wave there, even though it mightn't be the A setup because you've already got money already banked in there. That's why sort of when the recreational traders there, they start with a position, and as it moves in their favour, they add to the position and then move the stop up. Because they now got a bigger position size, but the risk is still the same. So they move the stop up, and then it goes higher again. They add to it again, and they move the stop up on a lot of them as well. So it might tear the stops a little bit, but the risk is always the same. So 1% when they first start, add the position, move the stop up, still 1% risk, but a bigger position size. Moves higher again, move all the stops up, still only risking 1%. So I've managed to sort of get now a 20% position size on with the same amount of risk. And if they're right here, whooshka, bang, you get a big move. So that's the, just do, we're looking at some big momentum names there, but if you can get, say, 10 or a 20% stake on, build it slowly. Don't go all at once. Build it out nicely. Keep your risk nice and low there. But if you get a 30 or a 40% move with something with a 15, 20% stake, it moves the needle on your account. So if you can do that, that's how the pros make money. That's I can never get my head around how these guys are making so much money. Getting these 50, 60, 80, 100% returns. If you go, what the hell are these guys doing? Most fund managers can't, struggle to get like 15%. So, but there's a style, momentum, in the heat, building position, that there's a style for those guys. So it's not easy, and it does take work, but there's definitely a sort of style towards that. So the first time you get a 20% stake on and you get a 30, 40% move, and it moves the needle, it'll be like a light bulb going up in your head going, wow, now I get how these guys can make it. Just to replicate that. The hardest part is actually replicating that, getting those big moves over and over again. That's the hardest part. But seeing one of those go off, that happened to me about 3 years ago. I got long something, built it up, as per these rules. I was following some other people's sort of setups, rules and stuff there. But when I had that 35% jump in about 5 days or something, and it moved the needle on the account, I just thought, wow, that's cool.
That's how it happens.
Yeah. So, but that, you can spend, you might only get 3 or 4 of those over the year. You might talk for the rest of it, but that's what moves the needle at the end of the year for these momentum accounts. So, yeah.
And just to preempt some questions, because we do get this when you talk about percentages, when you're saying 1%, you're talking about 1% of the portfolio at risk. So that's the dollar amount, $100,000 account. That position has $1,000 at risk between the companies.
Yeah, so if you've got a 100,000 K account, you shouldn't be risking any more than 1% of that, which would be like $1,000. So if you've got a $500,000 account, you might only be risking 1% as $5,000. So if you're building a position size up there, it should never be more than that. So you should never be risking more than 1%. Yeah. The way I look at it personally, Chris, is that the question that I would ask myself as a trader is, what would be my maximum drawdown that I'd be comfortable with if I got 10 in a row wrong? So if I got 10 trades in a row wrong and I'd lost 1% on those 10, I'd be down 10%. That's a fairly decent sort of decline there. If I could handle that mentally, then that's high. If I can't handle that, I'd only be happy if I only lost 5%, then it should be 0.5% per trade there. Okay, so if you're willing to take a bit more, you can maybe go a bit larger there. But you often see in those sort of trading competitions or people trading smaller accounts, they might risk maybe 2% per trade. So potentially 10 in a row could have you down 20%. But with 20% of a small balance, it's not as heady. It's all about what you can wear. But that's the question I would ask myself first and foremost is, if I got 10 in a row, and I've seen the best traders, I've seen McLaren he started this option sort of service there. He was trading, and he got the first 10 in a row wrong, and risking 1% of the capital, which obviously, but then I think you got on a roll again. You had like the next 7, 8 was right, and they were all, I think they're all making like 3 to 5%. So it's maths. It's maths. You just got to understand the maths and understand the risk. But let's persevere. We'll keep going on here before we get too distracted.
Well, so we've got $2 on the chart. We've come from 40 cents. We are at about the end of February, early March 2024. And then we go into the next chart. That's sort of the third to the left. We'll zoom in here, almost halfway. Yeah. So that $2 mark, we'll follow this line across to where we are about here, which is just kicked up to $2. Then you've got another little entry, like a little compression in here, sitting onto the 10-day moving average. And then you've said 50-day moving average was long-term support. That's this red line. 10-day moving average was often short-term support in the most aggressive parts of the trend. And that breakout, barely, it's coming under the 10-day and then reloaded, off it goes, touches, kisses, reloads, just uncuts it for a day, but then off it goes again for another couple. It's almost 2 months.
Yeah.
That's crossing the two charts over, so we're in March 2024.
Yeah, it's worth basically looking at sort of what moving averages sort of work for each stock and stuff, and the sort of stock that it looks at, and then oftentimes essentially if you have a bit of a model book to go back. I mean, I have all the VCPs and capital handles and stuff there, so if I see something setting up, I'll go back and look and see if it looks like something else, like it looks like a similar to these 2 or 3 charts, and then sort of see how they traded. And but you'll see here with this one here, really had these sideways consolidations, and most of them are on pretty light volume, Chris. So there wasn't a lot of selling going on in those pullbacks, and that was some pretty good volume coming into those sort of rallies as well. So there's some big green bars on those, So it had a breather for 3 or 4 days, and then bang, big volume bar on the way out. Here's like a big buying. So every time it sort of would turn up, we'll get these big green spikes here, sort of taking off there. So that's what I mean. If you use some with a 10-day moving average, you might get stopped out of some of it. With if you had the 20-day moving average there, you wouldn't have got stopped out until it got to 280, 285. So
what was that, from 85 cents or something like that?
Yeah. So broke out. Just 95 cents, 90 cents, something like, So you could have stayed there all the way, just by having the 20-day moving average. So literally just come in every few days and move your stop up. It's a good problem to have there. I mean, as traders there, to say that the hardest thing about trading is the setting. So once you get a position there and it moves up and you're making money, you're inclined to want to lock some money in and trade some. So that's why sort of trading some into heat, it takes pressure off. Then you just let the market trail the rest there. So
So what we've got there is we've had that rally, very strong movement, hugging the 10-day moving average, sitting above it. Then we have sometimes what you call the overbalance of the trend coming into this VCP. Now, this has come down and hit it. It's hit it with a bit of heavy volume, these big red days.
Yeah.
Is this a tradable VCP? Is there an opportunity for you in there, or technically it's one that's hard to trade? How do you view that? Is it one?
Yeah.
How did it get in front of you? Do you think you'd be able to re-enter this one?
It has sort of gone up 300% after doing 400%, got up 300 on the next leg, and then it sort of overbalanced. It did sort of broke the 10 and the 20, but it did come back and actually bounce off the 50, which is kind of interesting. That might have had you curious. And then it goes back up again, and then it pulls back to the 50 again. But now the whole thing starts to tighten up. So again, you might be thinking, oh, this is still hanging in here. So might have the potential. It would have been hard to trade there because it's a little loose. So it's not the best VCP. Like the best VCPs are the ones where they tighten up. This is a little loose there, but it does tend to sort of pop up there. So I think it goes for another little tightening phase as well there, Chris, and then goes a bit higher there.
So that's the movement that has breaking up higher and then pushing into what looks like is it another VCP or not, more of a compression of sorts, and the volume sort of, as you're saying, there are some down days where it drops off, but the big rallies are noted on the green bars. Are these tradable, or you're just noting that it's still going up, it's still got rallies in it, but they're not as easy to trade, or not as, they don't fit your playbook as much?
Yeah, look, you might have traded that VCP before that first high there. The price did sort of tighten up a little bit in there. But yeah, had a bit of a move there. And then once it corrected there, you'd only be looking at this on a B-wave break there. So I think it broke above there at 380. I think it goes to 440 before the whole thing pulls back again. So, that would have had you out breaking in below the 10 or 20. So it probably, wouldn't have made too much in there. But yeah, that's probably, I think, to be honest, once you've had a strong run like that, and then the thing tips over what I call the largest correction of the whole move, that's like what I refer to like an overbalance of the trend. That's when you probably be a little bit, if you're coming back in here, you're probably trading this a bit smaller. If you were going to go back in again, I'll probably be smaller. But personally, I'd like to see something a little tighter rather than rather than something loose there. So I would only go back into something like that. That's why that we talk about that SKS, that's kind of tipped over as well, had a big correction there. So that's a bit of a negative. But if it does tighten up, maybe there's still another trade in that. So, but if it was loose, I wouldn't go near it. If it's tight, it starts to tighten right up and have a low risk setup, then I might come back and it tightens up again. So it's all about risk, sort of as traders there, it's you just want to lose the least, if you're wrong, you want to lose the least amount of money. So you just want to try and take A setups as well. So we do know these strong names there, they can go a lot further, they can run a leg up here. So we definitely know it can be strong. So yeah.
So this has got the fifth company, and then what we're going to do now is just quickly reflect. These 5 companies make up 3 groups of 5, 15 companies, ASX leaders of the best performances that we've seen in the last few years. And we just heard there right at the end, you say kind of the best for the last, in the sense that in just doing this research, it has helped you put on possibly your best trade for the year of 2024, because it gave you the insight, the knowledge, and the depth of research and confidence to be able to trade, was it LTP, in the same way that you'd seen FND set up. So how did you recap this experience of doing the model book for you and the importance that it has for your trading right now in your evolution of learning and trading consistently?
Yeah, I mean, look, if you go through, look at those 15 setups there, Chris, there's definitely commonality there. So we know there's, first and foremost, there's relative strength by the stock versus the rest of the market, which obviously we get on your reports on the 30/30 report. There's also probably relative strength versus the big pullbacks in markets as well. So when most of those stocks on the markets had a pullback, those stocks have showed relative strength when the market showed the most amount of weakness. And then I'd say probably 80-90% of the ones we've shown here out of the 15 have probably gone to a new high within a couple of weeks of the market lows. So that new 52-week highs are made in pretty quick time coming out of those lows, because they have showed that relative strength there. And then we're looking at, the same setups there. They literally go through those, the cup and handles, the VCPs, a couple of little high type flags there, but really just those same patterns are just over and over again on those charts there. And we're looking for, nice strong volume on the way up, and we're looking for stocks to have a breather and light volume in the pullback there until you start to see some reasonable selling there. These things sort of can just keep going up and can go a lot higher than everyone thinks. So, you want to see, the warning signs is an overbalance. So where basically the correction, the stock pulls back larger than it's pulled back in the past, and is seeing probably multiple days of selling there. What basically I know Neil and IBD would describe as distribution, where you start to see some heavier selling days. So once you start to sort of see those larger corrections and heavier selling, then that should be the warning there. The good news oftentimes is even if you've missed, you haven't got out, if you haven't used a 50-day moving average or the 20 or the swing high, whatever there, I'd say probably 80% of those will come back and actually either make a lower high, or sometimes they'll make a margin new high before they go through the corrected phase. So even if you miss the top, you'll have a good chance of getting back near it again. In probably 80% of the occasions, there they'll tend to come back from it. Particularly these stronger names as well. They don't just sort of roll off straight away. They can do, but they tend to sort of give you a second chance to get out in probably 75-80% of the time there. But it's weird. We've gone through that now. It's kind of a simple model, really. It's you could write that model on the back of an envelope and follow that. That could make you if you've only been sort of making 15% returns or 10% returns every year, you follow that model. I think you could just follow that basic model. You could probably double that in the first year if you just followed that. And if you got it made it an art form and studied even harder, you could probably double it again. You really got your rules down tight there. That's my opinion. I could be wrong, but I think we've seen some of these momentum traders there that, seen like Oliver Kell was 900%. I mean, Caruso was up around 300 or 400%. Minovini's done 350% with $1 million account. Jesus, in a year. So David Ryan's done 3 triple-digit years for to win the US Championship. So there's plenty of guys out there making these big returns, but they are trading momentum names. They're trading those sort of those coils are tightening up, the breakouts, and trading some in the heat. Trading some of the others. There's definitely a model there.
Well, that model is the basis of what we're doing, our research, and what we're consistently servicing. So Garry talks about the momentum leaders every single Friday. That list, the 30-30 list that he runs down and through video, that's sent to members on Thursday afternoon at the same time Garry gets it, and then opens up the conversation to what we talk about on Friday. To that end, the man who's done all the heavy lifting, thank you very much, Garry Glover from Novus Capital.
Thanks, Chris.